JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 11th of March 2021. So yep, welcome everyone. Welcome to this Thursday's morning session where we're going to have a very quick look at the markets, a few the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation. It should not be considered as such and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, as always guys, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top, guys. So now jumping into the charts, first of all, I'll pick up on Nikkei and then I'll go through some other ones. I can see that there's in the chat room there's a comment so for the DAX. So yep, the first one I'm going to pick up here is Nikkei 225. The index did push a little bit here to the upside, but not much. I mean, it still remained below this 21-day EMA that I kept mentioning. And what I said previously in the beginning of this week, that even if we see a bit of a retracement here, keep your eyes on the 21-day EMA, or if this gets broken, this downside line taken from the high of the 16th of February. And yeah, I mean, if all this area does provide good resistance, then another slide here could be possible. If this downside line gets broken, now that's where it could become very interesting for more buyers, and yep, we could maybe start looking at some higher levels. But at the moment we are at this interesting spot here. So although we saw a bit of a move here to the upside, the index is still struggling with this 21-day EMA. So let's keep an eye on that one. If you want to aim for some lower areas, and if you want to be a little bit more on the careful side, well, you could wait for a drop below this 28,326 territory right here, which recently acted as a very nice area of support. This way, a nice good break below this would confirm a forthcoming lower low, and we could go for a larger correction to the downside. Shanghai Composite. Shanghai Composite is pushing nicely to the upside, or should I say pushed nicely to the upside, because it's closed already, and it closed nicely above 2%, so in positive territory. So basically, long story short, the idea here that I've mentioned before, that we could see a test of this 200-day EMA together with the 3,325 territory, and then maybe see a rebound from here, worked perfectly. So we had our rebound. Now the big question here is what's going to happen with this downside line here taken from the high of the 18th of February. If that line remains intact, of course, yep, we'll continue targeting the downside because the short-term trends to the downside. But if this gets broken, well, I'm going to take a bit of a neutral stand, because for me to, let's say, get a little bit more excited with the upside, I would prefer maybe to wait for a push above, well, not this little barrier here, but a push above this hurdle, this 3,544 mark. And this way, or actually, let me just quickly adjust this. I think this is not going to be that. Now that's going to be 3,542, so approximately around there. A nice good push above this could, yep, increase the chances for a further move higher here. But again, all this area here in between these two lines will be somewhat of a neutral one for me. Now the German index DAX. The situation here is that yesterday, or in my morning video, I said to you guys that if we get a pop above the 14,475 territory, then yes, this will confirm a forthcoming higher high. Yep, further acceleration to the upside could be possible. Now, if you can see, the index continued to rally, and it managed to reach the area yesterday near the 14,561 zone. So it created a new all-time high, and now basically if we take a look at the cash index, we will see that the price is trading at around 14,586. So basically we are now above this area, already above the yesterday's high, in the all-time high. So now, I mean, don't get me wrong, I mean, the sky's the limit for this one. But again, we will be very careful here, and in a way, yes, the upside scenario is still on the table. However, if we suddenly see the index falling back below the 14,475 territory, now that's where I'm going to get a little bit more comfortable with, let's say, examining a larger correction to the downside here, and I mean by larger, I mean towards this upside support line drawn from the low the 26th of February. Now again, we could try and draw Fibonacci extensions here. I mean, the only thing is that all that is going to be a little bit subjective, I would say. So let me just try to grab one. There we go. So for example, if we drag it, the one from here, from the lowest point of March of last year, and drag it up until the high of the highest point of September of last year, and then pick up on this area, this drop here that we saw in November of 2020, and we'll see that the price is not far from this hurdle here, this 61.8% retracement on the Fibonacci. So again, this 14,678 territory, that's where approximately is this 61.8% retracement, not retracement, extension on the Fibonacci here. The level that we can keep an eye on is this one. Again, will it reach that? That's a big question. Of course, whenever we go into all-time highs, we're always very careful, because of course, don't get me wrong, I mean, it always increases the chances for a possible correction, but that's why it's always tricky when you're at all-time highs, sitting at all-time highs and creating all-time highs, and yeah, I mean, you never know where is going to be that ceiling. So long story short, in a way, we could keep an eye on this idea here, aiming for the 61.88% here on the Fibonacci extension. Depends, I mean, if you want to draw it from here again, but this is a bit also very subjective, so probably the optimal point here is drawing it from roughly around here. So long story short, we could keep an eye on that level, but again, don't focus on it too much. I would rather say every single time, take a shorter time frame and look at the shorter time frame, and basically, if we start breaking the previous high, let's say if you're looking on a 1-hour chart maybe, or a 30-minute chart, and if we clear the previous high, then yes, I mean, it could go higher, of course, logically. But where will be that ceiling? I mean, no one knows here. So that's why be very careful. We can only assume that one of the levels could be here, this 14,678 territory, which is at 61.8% on the Fibonacci retracement here. Fibonacci extension. So yeah, guys, keep your eyes on that one. I mean, if I'm kind of examining a potential maybe correction lower here. However, at the moment, guys, I mean, we are not seeing that correction yet. We haven't seen seen the signal for that correction. So that's why I'm gonna take a neutral stand here, and I'm gonna I want to see where this is gonna end. NASDAQ 100. So from all the top 3 kind of US indices yesterday, and NASDAQ was the loser. So Dow and S&P managed to rally. Dow, and especially Dow, kind of created an all-time high, and but NASDAQ here remained on the modest side here, and this downside line did continue to provide resistance. So this is where it's going to be very, very interesting, guys. I mean, if this downside line does do the trick and continues to provide that resistance, then yes, another slide here could be possible, especially if if let's say the price falls below this little hurdle, the low of the 9th of March, and that's roughly around the 12,593 territory, because at the same time the price would be placed below the 100-day EMA, and maybe more sellers could see this as a good opportunity to step in. So that's why I'm going to be very careful here with NASDAQ. Again, other indices are pushing higher. NASDAQ, due to kind of profit taking in the technological stocks, NASDAQ is kind of let's say a little bit on the modest side, let's put it this way. DXY, so the dollar index, so broke this upside line today, and yeah, now that's very interesting, and that's going to be very exciting here could be very exciting for more sellers, because again, if the index remains below this upside line and then falls somewhere below the 91.60 territory, this is my level that I'm keeping an eye on, and if we do get a drop below that, then yep, we'll start maybe considering a bit of a move lower here towards the 91.05 territory right here, or the 90.63 zone right here, and then we'll take it from there. But if in case the index reverses sharply back up here and climbs back over this upside line, then yes, I will aim for the 200-day EMA or this downside line here, taken from the high of the 25th of September. Now, looking at gold, and yeah, this is so far so good, because the idea here that I've mentioned was that yesterday, I've mentioned that in my morning video, that we could see a retracement here. We could see even a retracement all the way towards this 1740 territory, but if it struggles to, let's say, remain above it, it might also overshoot it, test the 21-day EMA, and then drift back down. So that's why for example, my upside scenario in the near term is from around the 1760 territory. So if we do get a push above the 1760 territory, then yes, I'll go for a move towards this downside line, basically for a larger correction. For the downside, basically, again, like I said, the same scenario still remains in play, that if the pair struggles to, let's say, remain above the 1740 territory or this 21-day EMA, then another slide here could be possible. And my next target will be this upside support line drawn from the low of the 20th of May of 2019. WTI Oil, very quickly on this. So yesterday it flirted with this hurdle here, the 63.79. I talked about this, if you remember, and basically, yes, we were drifting lower, but the bulls managed to take control here and drove the commodity back above the this 63.79 territory. Of course, the stronger dollar also kind of, the weaker dollar also helped out here for this commodity, and yep, WTI Oil pushed higher. Now, what I'm going to do here is I'm going to take a neutral stand, because we are at a very interesting spot. We have rallied already quite decently, and if you even look at the weekly candle, for example, weekly candles, or even actually, I think it's better even a monthly chart here, you can see how, I mean, we kept on rallying here after this kind of fall, this strong fall in April of last year, and yeah, I mean, WTI Oil here managed to climb back to these highs, the 2020 high and the highest point of 2019 as well. It kind of got a hold up here. So what I can say here is that, for example, if you take a look at, keep an eye on this monthly chart, and if you see the monthly candle here remaining and struggling, let's say, to stay above all of these barriers here, above these 2019 and 20 highs, then there could be a potential signal for a reversal. But again, let's not rush into anything yet. First, let's see if that's going to happen or not, and then we'll just take it from there. For now, guys, I mean, looking at this picture from the shorter term perspective, I'm still keeping an eye on the 63.79 zone. A nice good drop below this could, lead to a bit of a larger correction to the downside, and then I'll target that 21-day EMA or even this upside line drawn from the low of the 29th of October. Bitcoin Cash, very quickly. I need to speed up a little bit here, I think, because I'm running out of time and I still have a few instruments to go through. So basically, Bitcoin Cash, again, to be honest, not much to talk about. This one, just wanted to quickly mention this. The same idea remains. We need that push above that 553 territory in order to get a little bit more excited with the upside, and preferably a daily candle staying above this area could do the trick for more buyers. And NZD-CHF, now this is something that I've mentioned yesterday in my Traders Tea Time. I told you guys to keep an eye on this little symmetrical triangle, which could be seen as a bullish pennant, because we have a prevailing trend here to the upside, and this little coiling up situation reminded us a potential bullish pennant, which, as you can see, so I mean, kind of working out. Well, I wouldn't say kind of, but is working out. The only thing is that I said to you as well that in order to get a little bit more excited with the upside, and let's say not to kind of get caught up here in anything that could, let's say, ruin your accounts. So I would maybe prefer to wait for at least a push above the 0.6728 zone right here. Then, of course, the next target is the highest point of February. But if that gets cleared, well, I mean, it will confirm a forthcoming higher high, and yep, higher levels could be met. AUDJPY, something also that I mentioned yesterday in my morning video, and yeah, fantastic move here. This is what I talked about yesterday. Basically, the idea was that to wait for a pop-up of this 84 territory, and yeah, we got that. So if the pair today remains above this 84 territory, my next target is the 84.95 zone, marked by the highest point of February, and then we'll take it from there. Then, of course, if that gets cleared, then higher levels could be met, but let's be very careful here for now. Very cautious. I mean, we are near some key resistance areas, and for example, right now we're not far from this little territory, somewhere around here, this 84.48 territory, and in 2018 these were seen as the highs here of May and June. So this is where the pair is currently stalling at, but if that gets cleared, like I said, the highest point of February could be our next target, and then we'll start just taking it from there. And by the way, this level here, this 84.48, or let's round it up to 50, also is marked near the lowest point of November of 2017. So basically a very strong level to keep an eye on right now. And if by any chance, I mean, this is something actually quite interesting, because if by any chance this barrier continues to provide resistance, we might not even travel to the highest point of February. We might maybe even reverse here back to the downside. However, again, maybe this, I'm getting a bit ahead of myself here, but yeah, looking at this picture, we are at a very interesting level right now. If that gets cleared, then maybe actually even the highest point of February won't stop it to the upside here. USD CAD. So again, the same nonsense. I mean, I kept talking about this one for quite a while, and basically the idea here that we need that break and we need that daily candle to remain above this downside line in order to get at least a little bit positive with the upside scenario, but we're not really getting that. Instead, we keep getting these false breakouts, and then now you can see that the pair has drifted a little bit lower, and it's closer to this barrier, this 1.2590 zone, which I said that if we get a break of it and we see the daily candle staying below it, then yes, further declines are possible. But again, let's not rush into anything yet. For now, guys, let's keep an eye on this downside line and this 1.2590 territory. USDJPY pushing higher again, trying at least, and basically the idea here was that, so this is one of those that didn't really work out, and have to admit these things happen. But again, basically the idea was yesterday that if we see the daily candle staying below this hurdle, below the Tuesday's low near the 108.41 zone, then it kind of increases the chances for maybe a bit of a larger correction to the downside. But as you can see, these things happen here, and unfortunately the pair is trying to make its way higher again. Now the issue here is, for example, if by any chance the pair stays below this little tentative downside line taken from the high of the 9th of March, so maybe this idea of drifting lower could still be on the table, because again, if it stays below this little downside line here, then yep, it could increase the chances for a bit of a larger maybe correction to the downside, given that we already had a decent rally. So let's be very careful, because again, if the indices actually continue to rally, the yen might be on the much weaker side, and that's why maybe USDJPY could push north. But if DXY suddenly starts collapsing and drops lower, then maybe even though the Japanese yen could be on the weaker side, still USD weakness would kind of overwhelm the Japanese one, and the Japanese yen one, and we could see this pair basically drifting lower. So that's why it's a bit of a tricky situation here with USDJPY, and it's like I said, it's stronger equities might yes, of course, could help USDJPY push higher here, but again, the weaker dollar right now, slight weakness in the dollar right now is something to keep an eye on, because if that strengthens, then USDJPY could drift back down. GBPUSD, very quickly on this, yes, pushing higher, but again, the same analysis remains, to be honest, because what I said to you guys, that I'm going to stay neutral as long as it kind of oscillates here around this 21-day EMA, but if it pushes above the 1.40 territory and stays above it, that's where I'm going to get a little bit more comfortable with the upside. Again, there is not much to kind of talk here about GBPUSD, and again, like I said, also keep your eyes on DXY, because if that becomes weaker, then yep, GBPUSD could push north. EURUJPY. Now this one I haven't looked at for quite a while, but yeah, it's quite interesting. It's pushing higher. It continues to push higher. Continues to trade above some of these upside lines here. Nope, not this one, but this one right here. Yeah, I mean, for now, the trend is still to the upside here. We also managed to clear some key resistance levels, like for example the previous highest point of March. Today we've already kind of created a new high for March. Now we're aiming for the highest point of February, which is around the 129.97 zone, which basically is kind of near that psychological 130 zone. But if that gets cleared, well, I mean, this kind of the sky's the limit for this one, or should I say, not the sky, but the levels last seen in October 2018 could be the limit for this pair. Of course, we're keeping an eye on the highest point of September here, near the 133 territory, but that's quite far. So that's why maybe a level, if we clear the 130 territory, maybe we could see a move towards this area right here, somewhere around here near the 130.87. And finally, EURUSD. So very quickly on this one, and yeah, I mean, we're pushing through this downside line. However, it's not a clear. I wouldn't say it's a clear push here. It's still it's just sitting bang on this downside line, so that's why I'm gonna take a bit of a careful approach here, because yesterday I said to you guys that if we get a break of this downside line and then we see a push above the 1.1952 territory, then yes, I will go for some higher levels, but yeah, I'll be very careful, because we would still remain below these two EMAs here, below this 1.2023 zone. Yeah, I mean, like I said, I will start looking at some higher levels, but if we get a push above this 1.1952, but I'll have a very careful stop loss just in case. I mean, this suddenly, let's say, travels a little bit higher, maybe tests, or maybe just comes close to testing the 100-day EMA and then reverses sharply back down. So, I mean, we need to exclude all the kind of possibilities of maybe, let's say, losing money here. So that's why, guys, be very careful. I mean, if you're not really comfortable here, just you leave it. Do whatever you're comfortable with. That's the most important in trading. Do what you're comfortable with. Don't do what so let's say what somebody else tells you. So just, you have your own, guys. You have your own opinion, and just kind of let's say evaluate yourself, see what you're comfortable with, and then take a decision. Here, for example, at this point in time here, I'm not really liking any setups on EURUSD, and just, yeah, I mean, if it'll push above this 1.1952, it kind of increases the chances for a move higher, but still, I mean, there are a bunch of obstacles, so I'll probably just continue observing the price action on this one. If by any chance the pair sharply reverses back down, then yes, the downside scenario is back on the table. So guys, I'll have to wrap it up here. Thank you very much for watching and listening. I hope you really enjoyed this session. So if you want to catch my video later on, my traders tea time, as always, 13:30 GMT time. For now, have a wonderful day.